What is quarterly estimated tax payments? That is what I'm going to be covering today. Hi everyone, I'm Lily Tran and the founder of Consultation. I am an enrolled agent who specializes in taxes and a certified tax coach where I specialize in tax planning strategies. Consultation is a virtual tax firm serving individual and small business clients across the United States. We provide dedicated professional tax assistance anywhere, anytime. Our mission is to make taxes the least of people's worries. Our vision is a country where people have more time and more confidence about their taxes wherever they are in life. Just remember, virtual tax help for whatever life throws at you. The objective is for you to learn what is estimated tax, who must pay or not pay, should you pay in equal amounts, when to pay, and how to pay. What is estimated tax? Estimated tax is a quarterly payment of taxes due based on the filer's reported earned income for the period. Most of those required to pay taxes quarterly are small business owners, freelancers, and independent contractors. These are individuals who do not have taxes automatically withheld from their earnings. Estimated taxes may be made for any type of taxable income that is not subject to withholding. This includes earned income, dividends income, rental income, interest income, and capital gains. The IRS required quarterly estimated tax payments to be filed by those who have income that is not subject to automatic withholding. The taxpayer then files the unusual tax paperwork for the full year and pays the balance due or requests reimbursement for an overpayment. A good example is when you're an employee of Microsoft, you get a paycheck. That paycheck shows taxes withheld for Social Security, Medicare, and federal withholding. But when you're self-employed, you don't have a paycheck. So then you would need to pay estimated taxes for taxes to be withheld for the year. So who must pay and not pay estimated tax? Who must pay are individuals, including sole proprietors, partners, and S corporation shareholders. Generally, have to make estimated tax payments if they expect to owe tax of $1,000 or more when their taxes is filed. Corporations generally have to make estimated tax payments if they expect to owe tax of $500 or more when their return is filed. You may have to pay estimated tax for the current year if your tax was more than zero in the prior year. So who does not have to pay? You do not have to pay estimated tax for the current year if you meet all three of the following conditions. You have no tax liability for the prior year. You were a U.S. citizen or resident for the whole year. Your prior tax year covered a 12-month period. Should you pay in equal amounts? Usually the taxpayers pay their estimated tax payments in 4 equal installments, but they might end up with unequal payments in some circumstances. For example, if you had your previous year overpayment credited to your current year's estimated tax payments. If you do not figure your estimated tax payments until after April 15th, when the first one is due, or if you actually made more money in one quarter than the other. When to pay estimated quarterly taxes? You can pay all your estimated tax by April 15th, 2021, or in 4 equal payments by the dates shown in the table below. So the first quarter, if you earn income during this period, January 1st through March 31st, the first quarter is due April 15th. The second quarter for earned income during the period of April 1st through May 31st, the second quarter is due June 15th. The third quarter, if you have earned income during the period of June 1st through August 31st, your third quarter is due September 15th. Your fourth quarter, if you have earned income during this period of September 1st through December 31st, typically your fourth quarter is due January 15th. But in this case, in 2022, it's due January 18th. You do not have to make the payment due on January 18th, 2022 if you file your 2021 tax return by January 31st, 2022, and pay the entire balance due with your return. So how do you pay estimated quarterly taxes? You can use the form 1040 ES to calculate and pay estimated taxes. There are a number of ways to pay estimated taxes. You can mail your estimated tax payments with the IRS form 1040 ES and include your payment. You can also pay online. You can pay electronically as well using the IRS direct pay system or the US Treasury electronic federal tax payment system. And keep in mind, there are fees if you do use a credit card. There are penalties if you owe more than $1,000 in taxes. So generally, if you do not pay enough tax in a timely manner, either through withholding or making estimated tax payments, you may be required to pay a penalty. Whether you make estimated tax payments or rely on withholding, you could be hit with penalty if you do not pay enough tax throughout the year. The penalty does not apply if you owe less than $1,000 in tax. You can also avoid the penalty if your 2021 withholding or estimated tax payment equal at least 90% of your 2021 tax liability or 100% of the tax shown on your 2020 return. If you have questions about estimated tax payments, add your questions below in the comment. I will also share a link to schedule a complimentary phone consultation. Make sure you like, comment, share, and save these videos. There will be more videos coming soon.